This is Brenda Blackburn from Blue Ridge Community College, and I am here with JanaHosmer, who is an accounting instructor, the lead instructor here at Blue Ridge Community College. She's going to talk to us a little bit about a budget. Thanks, Jana, for being here.
Thanks for having me. All right, as Brenda said, I am going to speak to you for a few minutes about budgeting for your child care center. What a budget is, it is simply the financial goals of your business, of your child care center. It's a planning document. And as a planning document, it is only as good as the input that you put into it. So if you put bad numbers into a budget, you're going to get bad information out of your budget. The reason that we budget, well, there are lots of reasons that we budget, but one of the reasons is that planning oftentimes takes a back seat to daily operations. So by requiring a formal planning process or a budget process, we can formalize looking at the future and making decisions based on what we want, what our financial goals are, instead of making decisions based on the heat of the moment and daily operations and trying to squeeze planning in and amongst other things. The other thing a budget provides for us is it provides a control environment because we can benchmark back to what we think the numbers should have been. For example, if we were to budget $3,000 for food per month for our particular child care center, and our cook actually spent $6,000 for the month of March for our child care center, then we would know that we would need to step in and analyze what's going on. And it could be anything from the cost of food went dramatically up, or somehow we ended up buying for 2 months at one time, or something fraudulent like the cook is, feeding her house out of our child care center's operational budget. So it provides that benchmark that provides a nice, effective control environment to monitor the different expenses of the company. So a budget, what is it line by line? A budget is a summary of expected revenues and expenses of your child care center. So what is a revenue, or what is income? Revenue are the items in a child care center that increase the equity of the child care center. And equity is nothing more than the value of that center to the owner, whether the owner be a shareholder, whether it be a sole proprietor, or whether it be a nonprofit entity. Revenues increase the value of the child care center to whoever that owner is. Examples of revenues would include things like tuition, application fees, fundraisers, grant awards, etc. Are there anything that you can think of that will ultimately bring cash into the company or into the child care center? A budget also shows expected expenses of the child care center. And like I said, the budget is only as good as the information that you put in. So when you're putting in these expenses, and notice personnel is first, salaries are always going to be the most expensive item for a service business like a child care center. So when you put these in, you want to really look at what the director cost you last year. Are we giving the director a raise? And make sure that that's reflected in the budget for the director for this year, etc. with all the other personnel. The other thing that you don't want to forget when you're budgeting your expenses for your personnel is that what they take home on their paycheck is not what they cost you as a child care center. You have to pay FICA for them. You have to pay workers' comp for the employees in some states. You have to pay unemployment, both federal unemployment and state unemployment taxes on your employees. So just what their salary is not the full amount that they cost you. They cost you all these extra fringe benefits as well. Below personnel in your budgeted expenses, you'll find things like rent and utilities and advertising expense, food, supplies for the classroom, insurance in case someone gets hurt at the child care center, Notice this one right here for CPA fees. I think that's a very important line item for a child care center to have if you don't have an accountant that knows how to take care of all your forms for you. When you hire personnel, you are also responsible for paying all the payroll taxes and remitting the FICA and the federal unemployment and the federal income tax and the state income tax and everything else there is to have an employee onto the respective governmental units. And there are checks that are to be written for that, as well as forms to be filed once a quarter and then again once a year with both the state and federal government. So there's a lot to the accounting side of any business, including a child care center. So that's what that CPA fee line item is for. Is how much are we going to pay our accountant to do this for us if we don't have someone qualified to do this for us in-house. Then at the end, we end up with total income or total expected income minus total expected expenses will bring us down to a budgeted net income. And in this particular situation, they budgeted the same thing that they expended. So therefore, there wasn't a budgeted net income. But if the idea would be to have more income than expenses, and we would end up with a net income for the period. And that net income in a for-profit company is going to go to the owners. And in a nonprofit company, it's usually put back into the nonprofit or used to reduce, say, tuitions or other ways of reducing expenses. Once you are all done with your budget and you start moving through the year that you budgeted for, you have to be very careful to compare or to benchmark your actual numbers to your budgeted numbers. And what I've switched to up here is an income statement for the period. So your income statement is your actual revenues and your actual expenses for the time period. And your budget is your planning document that you do ahead of time that is your estimated. So when we take our actual and we compare our actual to our budgeted, we can see that we came in a little lower on income for this time period, assuming it's the same time period. We came in a little bit lower on our income than we anticipated. But looks like likewise we also corrected our expenses to be lower than what we expected them to be. So we were able to figure out how to deal with that shortfall. It's important to use your budget as a benchmark. You don't want to create it in a vacuum before the year starts and then never use it again. You do want to make sure that you are comparing your actual numbers to your budgeted numbers. The other thing I just want to take a little bit of time to talk about before I close out the video is to talk a little bit about cash flow in relation to budgeting. Keep in mind that all the numbers on your budget are based on when you expect the revenue to come in and when you expect the expense to be incurred. That is not always the same timing as when you actually have to write the check and when you actually receive the check. So it's very important to recognize that there can be timing differences between when the income comes in and when the expenses go out. And employees, believe it or not, expect to be paid on payday, irregardless of whether or not you've actually received the cash from your revenue. So it's important when you're thinking about the budgeting process to think about the fact that we need to keep a cash buffer so that if tuition comes in after expenses are paid, or after expenses are to be paid, that we have a buffer of cash that's going to still allow us to pay our employees and our other expenses in the meantime. Most small businesses actually fail in the cash flow area. So it's very important to realize that we have to keep that flow of cash positive as well as keeping the flow of net income, revenues to expenses positive. And that is our video on just kind of the overview of budgeting for a child care center.